have to bounce off the 50 or bounce off of the 200, most likely the 50 because the 50 is always right there. And so for me, that's like almost like a requirement for me to take the trade. And so if it doesn't do that, then I'm very unlikely to take the trade because that's one of the main things that I want to have when I take one of those trades like that. So I think as you get more into it, you're going to start to identify essentially what pairs or what setups patterns the pairs that you're looking at like to provide. So that's going to be an important factor for you when you're doing the back testing. Now, when you're doing the back testing, there's going to be certain things that I think you need to figure out because there's going to be pairs that you look at that you're not really going to understand how they move, right? And so it's always going to be very confusing for you when you're looking at that particular pair. So I think the faster that you can identify what pairs are like that, that way you don't waste your time on essentially backtesting those pairs because you only really want to backtest the pairs that you actually like to trade. For the longest time, whenever I started trading, everybody was like, you need to trade EU, you need to trade USD JPY, and those were like the main pairs that people told me to trade. Well, come to find out, those are like, for me at least, those were the worst pairs to trade because they didn't offer a lot of liquidity in the sense of movement every day. So didn't really move that much. So for me, it wasn't worth, taking trades on those specific pairs. Granted, the moves may be there, but the pips themselves aren't really necessarily there. And so as you go through the pairs, you're going to start to identify certain pairs that honestly you just vibe with. You know, you literally just vibe with those pairs. And so those are the pairs that you actually are going to spend the most time with trading and backtesting and getting to know the most of. And so on those specific pairs, those are the ones that you want to, go back and start to really get as much data as you can on them as far as what patterns they like to produce. And like I was saying before, you don't have to like literally replay the chart to find out what patterns they like to produce. Essentially, you could just go back from, let's say, 2020. Um, if you have the Pro, you can go back 10,000 candles. I want to say, I don't know how far back 10,000 candles is, but if you can go back to at least, let's say, January of 2020, which I'm pretty sure you should be able to do that on that. Where's the first? Yeah, so you could basically have, let's say, why am I doing this on this page? Page sucks. Let me do this real quick so I can show you. Start the week on the 31st. So what you can do is to essentially see, what are the most setups that type of setups, either 1, 2, or 3s that this pair likes to do, go back to the beginning of the year and just run it for a whole year. And as soon as you have like a setup, you can tag it. So what you could do is you can make like, T1. You can make another one for type 2s. And you can make another one for type 3s. And so what you can do essentially is you can start to tag the setups as this is full blown, playing out as fast as possible. When you see a setup, you can tag it. So this is like a type 3 here. And if you need another, let's say type 3, you can go ahead and like make, if you click on it, you can make a copy of it and tag it, to the next chart. And then just play. So basically at the end of, the year 2020 or whatnot, so you should have essentially tagged as type 1s, 2s, 3s, and you can count literally how many type 1s, how many type 2s, how many type 3s did that pair produce. So let's just say, for example, if it produces, I don't know, 75% type 1 setups on GU, then guess what? If you're trading a type 1 pattern, then that's a good pair for you to trade, because it produces the setups that you want or that you're specifically looking to trade. If it only produces, I don't know, 20% type 3s, and the type 3 is what you're looking to trade, then that might not be the right pair for you to trade. But at least you'll know what the numbers are for the specific setup that you want. And so let's say that, type 3 is the setup that you want to trade. Okay, so then you go back to all the different type 3 setups that are here that you tagged throughout the whole year, and you start to identify what are all the common things that these type 3s have in common that made them good setups. So you start to build out basically your list of different requirements for type 3s, type 2s, whatever setups it is that you're looking to trade. Does that make sense?
Yeah, very much so. Thanks.
So if you're looking at like type 3s on, let's say these two ones here, what do they both have in common? Start thinking about what are the things that they both have in common. So clearly the timing is correct, 3:45 railroad track. This one, same thing. This one happened right at like 3:45, 4 o'clock. They both bounce off the 50. All right. What does the TDI look like here on this one? And also on this one? They're both bouncing off the 50.
Hey, Mark.
Yes.
I have one quick question. So when you get it wrong, for instance, you're backtesting and let's say you thought it was gonna go up, but it went down. You record that error, right? And is there anything like I should ask myself while I'm doing these errors? For instance, what I did good, I already know. I check mark all the evidence that it was gonna go my way, and it was correct. But what about when it was wrong?
I mean, when it's wrong, so what made you got to think about what made you get into the trade. Why?
Okay.
Ask yourself, like, why did I get into the trade? What did I see that I thought was there? You know, do you have an example of one?
Yeah, I do.
What's the
One
pair and the
second.
date? I'll tell you what you did wrong.
So it's a pound USD, January 16th, 2020.
January 16th. Okay, that's like a couple days away. So here.
Yeah, and at UTC timing 12:30. So that'd be, I think, early New York. Let me see here. New York 8:30.
Right. So you said the 16th,
The 16th, correct.
right? And it was at, you said
8:30.
UTC.
8:30 New York time.
Okay, so the beginning of the New York
Yeah,
session. Then.
yeah.
Got it. And so what did you think that was, by the way? Was that a buy, sell? What did you end up taking on the back testing of that?
So based on price action, I thought it was a continuation, but it stopped literally at the top of the Asian range, and then going against the EMAs actually, it went below the 50, and then it went down to the 800 and below.
Okay. So you thought it was a continuation trade going down?
Upwards.
Upwards. Okay,
Yeah.
got it. And so you were taking it as a buy to keep going higher. Yes.
Yes.
Okay. So this is the 15th, so it's the very next day. All right, so let's see what we got here. All right, so before we even get to that, what do you think? All right, what do you think is happening so far? What was your thought process when you're looking going into the 16th here into the London session?
One sec here. This is pound USD, right? January. Oh, my apologies. It's actually June 16th. That's my fault. My fault. I thought it said January. My bad.
So June 16th.
Yeah, June 16th. Yeah, my fault. It was the A. I thought it was a U.
I gotta get out of this real quick. So that was what, a Tuesday, is that right?
Yeah. Yeah, it was a Tuesday.
All right, so tell me your thoughts then on this, that you were thinking at the time of taking this trade here.
So I let London pass. I wanted to see what price action was gonna do. I didn't find a good enough setup in London, so I seen price action kind of give me continuation vibes, if you get what I'm saying.
Giving
And
you giving you the
so
continuation vibes.
it gave me continuation vibes. I'm not gonna lie to you. So I just trusted my gut, and then I just went with it because it was bouncing off the 50. Therefore, it rejected the 50 probably once, twice, 3 times, 4 times. So to me, I'm like, okay, so it looks like a continuation back up, right? But then I got it wrong at 8:30.
All right, so just based off of what I'm looking at here, I mean, can anybody tell me what my bias would be? I mean, I'm kind of like already cheated because it's already got the boxes already put up there, but
Right, right. It's level 1.
right. So
Yeah,
you're coming off of a peak formation high, right?
right.
So what's the bias?
Obviously sell.
So then why are you buying?
I'm not gonna lie. I thought it was a reset.
And it's just a valid question. Why are you buying? You know, because you thought it was a reset.
Yeah.
Okay. It's not a bad thing to think that it was a reset. All right, so you had a move, straight move down. What is this? 53 pip Asian range. What is the move from here? Down here is like, okay, it's actually,
It's a whole cycle, right?
it's a whole cycle. I
300
don't think it would be
300 pips.
a reset because let's just say it's about 110 or so.
Yeah, it should have been
about
100. Yeah.
300 or so. Okay. So let's see how this is playing out here. This is 7. Okay, so 645.
Yeah. Still outside the box.
So 8 o'clock. All right, so 8 o'clock, you're like literally in the middle, right? So what happened? Just answer me this question for me. What happened during London?
Price came down to the 250, but then rejected it, went back to the middle, but didn't go all the way up to the top of the range.
Yeah, so what is, for me, what's a requirement that needs to happen in order for you to have a continuation trade? What needs to happen in London?
I can't answer that, to be honest.
All right, so in London, you need to have a one-way directional move,
Oh, okay,
right?
okay.
You need to have a one-way directional move because what you want is you want the pullback for a continuation trade to pull back during the in between of the two boxes.
Right,
Understand?
right.
So when the time comes, it's 8:30, 8:45, 9, you're literally, the pullback has happened, and now you've pulled back from the aggressive move that happened during the London session. Does that make sense?
Right. But based on what you're gonna see next on price action, would you change your mind? That's what I'm thinking.
Would I change my mind?
Yeah.
Well, because you didn't have a one-way directional move,
It didn't cross your mind.
it would not have crossed my mind to take this
Right.
other continuation
Okay.
trade. I see why you would want to take it as a buy, right? Because you just completed a cycle and you're thinking you're going back up, right? So I get why you were thinking that. Now, if we go to, let's say, a higher time frame, I'm just curious to see what the numbers are for this. but that's exactly what I expected. So this right here, I'm just going to put this out here. And so that line right there on a higher time frame, because on a higher time frame, right, this is just one level. Do you understand?
Yeah.
This is just building one level on a higher time frame. And when you have peak formation high up on a 4-hour time frame, when you get a pullback, that pullback goes about 61, 50% retracement. That should give you a possible opportunity for a trade, meaning trade to go back down.
Right.
Because off the higher time frame, you're still building one level. Do you understand what I'm saying?
So Monday and Tuesday was literally a retracement.
So yeah, it was a
Or
retracement,
Monday.
yes.
Yeah. Okay.
So if you think
And
about it, you didn't have, if you think about it, you didn't have a, whatchamacallit, you didn't have a, any kind of push on Tuesday, right?
right, more consolidation, yeah.
Right. Well, what I'm saying is like you didn't have a push on Tuesday, like let's say you would have, you know, a whole big move, you know, on Tuesday to make you believe it's a market maker cycle or something. You know what I'm saying? So like right now, you're looking at this, and the only two possibilities for me is either a trending cycle or accumulation, right?
Which
Because
what I was thinking.
accumulation with the EMAs going straight through price like that,
Yeah.
right? So if it's an accumulation cycle this week, what would be my bias?
Back down to the range. Bottom of
Right,
the range.
be a sell, right?
Yeah.
So the one thing that I'm interested in is whether or not do we break from this high, this 26, you know, 750. Granted, it's a quarter point number, go figure, right? So do we break past this? And if we do, then that would be a trending cycle, right?
Yeah.
For, you know, to go up or whatnot. You know what I mean?
Right.
So
So yeah.
that's what I'm looking for, because on a 4-hour time frame, this tells me that the retracement that it did from the top to the bottom all the way back up again is a 50 to 61, which is pretty good area actually for the sell to come into place.
Right. See the way I'm thinking it is, you see where the reject right there on the 50 EMA.
Yeah.
So literally that's why I pressed the trade, right? Or the that's why I would have put the trade. And
Okay. So what's your so tell me, if you put in a trade here, what's
yeah.
the plan? What's the exit strategy?
Well, if I don't have the EMAs as a take profit, usually 30 pips to 50 pips would be my first two targets.
So is it something basically like this? So, I mean, you know, a two to go 2 to 1, you're gonna need about, you know, 55 or so.
And my error shows that I went to 50. Yeah,
You went to what?
I went to 50. So
You
I
went to
had the
50.
50 take profit. Yeah.
Right. Well, what's your stop loss, by the way?
It was 19 pips.
19. Okay,
Yeah.
so you're pretty close on it then.
Like you said, I'd rather be wrong quick, right?
I absolutely agree. Yes. So let's say you went 30, right?
Sure.
30 pips. And what's the candle that you enter on, by the way?
This one right there, the one that rejected the 50 right there, the last one.
This one.
Yeah, this one, beautiful entry. I
Okay.
thought it was a beautiful entry. and then rejected my ass so quick.
Right. So, well, I mean, you see the rejection here?
Yeah, literally at the top of the range. Yeah.
Literally pins right here to that. All this is just basically a multi-session M.
Mm.
It's just a multi-session M, is what it is.
Yeah, focus too close on the picture. That's what it is. I have to
I
zoom
think
out.
that if you would have taken this trade, you would have taken this trade and, oh shit, let me get these people in. If you would have taken this trade, I think that if you would have seen this candle here, where it basically rejected the high, right? You should have gotten out here.
Yeah, that's what. Yeah, right.
And just call it a break even.
Yeah.
But this is a multi-session M, and this should go probably more down, I assume. Yeah.
Yeah, for the rest of the week, it just kept going down from there.
For the rest of the week, kept going down. So
Yeah.
this would be, so right here, for example, then I'd be looking for another sell to pin off one of these EMAs, either the 50 or the whatchamacallit, the 200.
The 200, yeah.
Yeah, see, like right here, see that?
Right.
Pin, pull back, go.
The thing is with pound USD, you'd expect the week to go as a trending cycle, you know,
This
because
is
there's so
another
many trends, so
thing
many
here
trending
too.
cycles.
So there's another pin right there. Here's your, right here, 7:15, 7:30, 7:45. This happened. See how this is what a continuation trade you would want to look like, except you want this pullback here. You want this area, literally like this, right here. You want this to be like 8:30, 8 o'clock. So full move like that, pull back, and it to be like 8 o'clock here, pinning to like a 50 like that. Take that all day long. So anyway, so you're looking at, you know, the specific trade setups. And so if you're trading, if you know that you're going to be trading, let's say only the US session, right? Then essentially you're just concentrating on really two setups. Is really all you're concentrating on, is either a reversal or a continuation. That's it. So I don't know how many of you are trading the US session, but I mean that kind of narrows down, you know, what you're looking at. I mean, there's only really a certain amount of options for you available. You know, if you have price action that moves, you know, within, let's say, the box here of, let me find one here. So if you have something like this where price action moves, what is up with this stupid? If you have price action that moves sideways, let's say this is the middle of the range here, let's say the entire London session is like this, like this, like this, like this on the top half, okay? The move that you want the trade set up essentially is going to be, should happen during the US session. The only question you got to ask yourself is it a buy or is it a sell? And so what evidence do you have to give you what, you know, to let you know what directional bias you should go with? Can you tell where you are? Can you locate the closest peak formation, high or low? How far away are you from that? If you're pretty close to that, then obviously you want to go with that. You know, if you're coming off of a peak formation high here, then you want to go with a sell. If the peak formation low is all the way down here and you've already got one, you know, two here, and this is, you're here working the two, then you want to look for buys, especially if you have the EMAs right underneath you. It just makes sense. But if you have a move in the US session that's, you know, straight away like this and it pulls back and literally like you're here at 8 o'clock, 8:30, and you get any kind of railroad track, any of that stuff here, like you saw in this other example, then there's a continuation trade. If they went all the way down like this and they worked the bottom out throughout London, and now you're in the US session, then you'd be looking for a reversal, like a type 1 reversal, like a multi-session type 1, you know? So you're kind of you're very limited, you know, to the trade setups that you can get during the US session. But I mean, I think at the same time you have an advantage because you already know what's happened, you know, in the London. So that should give you a pretty good clue as to what you can expect. You know? So you only got certain options. If you're in if you're in London, then obviously you pretty much have all options available. It just comes down to, okay, what setup am I trading? Am I trading all setups? Or am I just trading a very specific setup? Am I trading just type 2s, type 3s, type 1s? You know, obviously if you're trading type 1s, you're waiting for price to break the high or the low. But you need to get the data from all these, from the pairs that you're looking at, so you can see what trade setups it likes to do. Once you get the data of what trade setups it likes to do, then you can see, start to put together, what does it look like? What do the setups look like in, you know, as far as type 1s, 2s, or 3s, what do they all have in common? You know, if you can take type 1s that are pinning to the 200 and you have TDI confirming for you, you get a pullback here. I mean, that's a good trade. You have to remember that if you take just these trades only like this, you're not going to trade every day. But the fact that, you know, if you catch one of these trades here, it's 150 pips, that'll make up for 3 days of not trading. You know? like I was telling, I think it was Frank, I was telling today earlier that a lot of retail traders, when they first start out, they they feel very pressured to take trades every day because they either quit their job or they're trying to to make money to pay the rent next week or whatever the case may be. Like you can't have that kind of pressure on you because you'll never be able to trade, successfully over a long extended period of time. You're always going to be thinking that in the back of your mind. You have to build an account first. It just doesn't happen overnight. Nowadays, you have the advantage actually of if you know how to trade, you can just get somebody to give you money to trade. So like an FTMO account or something like that. But still, like you still need to build that income. You can't just all of a sudden just quit your job. You know, you need to have some type of an income coming in first consistently so you don't have the pressures of constantly having that on the back of your mind of I need to pay the car or insurance or rent or whatever. You can only do that by building an account over time and letting it compound, not touching it. Once you compound it enough, then you can go full time in it and you don't have to have that in the back of your mind when you're trading. The biggest advantage that you could have is just knowing that you don't have to take a trade today if you don't want to, and you'll be completely fine. But if you can't have that mindset of openness, of just knowing that you don't need to take a trade, and you have the different mindset of I have to trade because I got to pay rent next month, that's a problem. It's a big problem. It's a big emotional and psychological problem that you're going to have with trades. So it's good to have a plan. It's great to have a plan and a trading plan as far as knowing what it'll output for you over an extended period of time. But if you consistently have the mindset of I need to trade in order to make money to pay rent or something, then that's going to be a barrier, huge barrier for you. What other questions do you guys have regarding back testing? Anything?
Mark, that made a lot of sense, man. As speaking facts here.
I mean, I can only speak on what I went through, you know what I mean, and what worked for me. So
Yeah.
what I've seen a whole bunch of other traders try to do, and I've literally failed to do it.
I had a question
Yeah.
about okay, so I seen some of the losing trades that I was getting, like with, I guess my last one was wrong, but like when the 50 EMA is closer to 13, and I take it across 13, and like the 50 is right under, and the 50 stop me out. Should I wait until it crosses the 50 if the 50 is closer to 13, then take it? Like, I'm just seeing it, I'm driving right now, so I don't have to show you an example. I probably have to.
Yeah. So you're saying if the 13, if the 50 is close to the 13, do you take the trade or not, right?
Yes.
Okay. So you can't be afraid to take a trade because the 50's there, right? So the first thing I would ask you is, in order for you to take any trade, would you even think about the 50 if you didn't put a 50 on there to begin with? You know what I mean? So like what makes it so scary about taking a trade that bounces off the 50, let's say? So if you're in a sideways market, right, that would be an area where it might bounce off the 50 like that. But if you have a directional bias and you know where you know the correct direction, then I mean the 50, you shouldn't be scared of the 50. So like on this Wednesday here, for example, you know, would you be scared to take a trade because of the 50 being there? Would you be afraid to take, you know, this trade because the 50 is right here? I think really the real question is, what is your risk to reward ratio on that trade if you enter it? So what's your risk? You know, in this case it'd be 22 pips. In this case it'd be 59, right? But you're using, let's just say you're using the EMAs, you know, to kind of help with that. And let's just say that you want to go down to the bottom here. So just to go to the bottom, you're still at a 2-to-1 risk to reward ratio. I think that if you're getting scared of taking trades because the 50's there, then instead of being afraid to take the trade, just lower your risk on the trade. So if you're normally, let's say, trading a standard lot on every trade, let's say, then lower the risk so you'll feel more comfortable taking the trade. So let's say take a 0.25 instead. Now you've knocked off significant risk, you know, off of your trade. Because if this trade is, you know, 22 pips, that's what, $200 or so on a standard lot. Now you've lowered it to 0.25, which is what? How much is that? Like $20? Do you get what I'm saying? So you're going to feel a whole lot better if you just lose $25. You lose $25 or $20, whatever, compared to losing $200. Another thing as well is that you got to ask yourself, like, how many pieces of confirmation do I have? You know, if that's the second leg and it's giving me a star pattern, it's pretty good confirmation. What else do you have? You have the TDIs there. Okay, that's good. What else do you have that's at least telling you that you're in the right direction? You know, well, if you're going sideways because if you're in an accumulation cycle because of where the EMAs are like this, right? Your Sunday, Monday highs here, and then your lows there, that's your range. So the range itself, you're in the right directional bias for the weekly cycle, at least. You know what I mean? You're coming off of, if you go up to a higher time frame, like let's say a 1 hour time frame, you're coming off of a peak. You know, if you go up to even a 4 hour time frame, you're still like on level 1. You see what I mean? So the bigger picture is on your side as well. Does that help India?
I think I'm gonna just take away the 50 or some trades. See, like I said,
Yeah, just don't be afraid. That's it. Just don't be afraid. If you lose a trade, you're gonna lose it. That's it.
Yeah, that helped me too, actually.
It's not a big deal.
It's that 50, because when it bounces your way, it's a beautiful thing, right? But when it's in your way, I don't know.
Yeah, I mean, just don't be scared of trading because of the 50s there.
Got you.
Just don't be afraid of it. So what else you guys have for me as far as questions go? So does everybody have a better concept or grasp of back testing and all that stuff? Just remember that, you know, the rest of the course, you know, pretty much, I mean, you should be back testing every week, you know, whenever you can. Just remember that the majority of the time that you're doing this, or the majority of the time that you spend on the charts right now as you're learning, should be back testing and formulating a plan. You shouldn't be worrying about trading a live account, because how can you possibly trade a live account when you don't have everything put together yet? It's like you're trying to, you know, be a surgeon right after getting out of med school, and you haven't even done your like residency yet or any of that stuff, you know? So very important that you focus in on creating the plan first and getting that put together. Because if you don't have a plan, essentially it's you're out in the middle, you're like trying to drive a boat without any GPS navigation. So you don't know where to go. The majority of my time that I spent, I didn't I didn't have to worry about waking up for London or waking up for New York session, because the majority of the time that I spent was just backtesting, putting a plan together, backtesting, putting a plan together. That was it. That was the majority of the time. When it came down to actually being up for the London session, because that was the only session I could trade since the US session I was still working, then I just adjusted my sleep schedule. You know, I'm living in the East Coast, so instead of going to sleep at 12 to wake up at, you know, 7 to go to work, I'm going to sleep at 7 to wake up at 3 to go trade London. But you don't do that until you actually have a plan that you've put together, that you've back tested, so you know what it puts out. Majority of this stuff you guys can do literally offline. You don't need to be up for London or anything like that. The only time that you need to be up for London is whenever you're actually doing live trading. That makes sense?
100%.
Yep, definitely.
So do not pressure yourself to be up at all hours of the night waiting for London to open and stuff like this whenever you don't have a plan yet. It just doesn't make sense. It'll make your life miserable, I guarantee it. And if you have a husband or wife, it'll make their life miserable too. The last thing you want to do is not have them on your side. So very important that you actually have them on your side, because without that, forget it. It's very difficult to make this happen without their support. All right, so let's look at any other questions. Yeah, no other questions about testing or any of that stuff.
Mark, I just remembered another one I forgot to write down. So how you were at the beginning of the session, just kind of going through and marking, type 1, type 2, type 3. Do you think it would be better for the month to start just by going in and labeling those and quickly? Because I think sometimes, because I'm still new and a little bit nervous, when I'm getting down to the nitty gritty, I will talk myself. Well, I think it's a type 1, but I'm not going to take it. So do you think I should start out with that kind of bigger picture and then hone in? Or should I just keep following the Excel spreadsheet and look trade by trade and see whether or not I would take it?
I think that the replay part. So the replay part that you see in the video, right, is the collection of data, right, to kind of get you to feel out what's happening in as much as real time as possible, right? But what you also need to do is, before you even get to that part, is I think you really, and this is I take every, like, literally every month, like, I learn something, right? And I try to figure out how I can do something better. Okay. So if I had to do it all over again, right, I would tell you to to go ahead and put the labels literally on each setup, so you know what the setups are. You know what I mean? And
Yeah.
figure out first, what are you trading? What's the setup that you're trading? What do you feel most confident with out of all the stuff that you learn in 8 weeks? Don't worry about the stuff that you don't know. Worry about the stuff that you feel the most confident in, and start with that. And then start just literally labeling, you know, the setups. And as you're labeling the setups, I mean, obviously you don't need to replay the charts. Like, I can label the setups just by doing this, because I can see the boxes. Do you know what I'm saying? So I don't need to replay the charts. I can just label them from here and keep going back and keep going back and do it that way. Also, what I would be doing is I would be marking out the weekly cycles, just to get it. Because if I'm looking at each individual day and marking each one, if there's a trade set up on that day, then I might as well just mark the weekly cycle as well. So the same thing, make 3 labels for ACC for accumulation, MMC for market maker, and then, T for trending or whatever, and then just mark the weeks. That way you have the actual, by the time that you go, let's say back to 2020, you'll have all the weekly cycles, and then all of the types for that entire particular, for that cycle.
I think that'll help too, because like you said, if I want to trade, say, more type 1s or type 3s, that will help you figure out quicker that, oh, this pair is not good for those types of setups, and then you can move on instead of going day by day, nitty gritty. So I think that's real helpful. Thank you.
Yeah. And then once you do that, then you can start to formulate the plan of, okay, how am I trading that specific setup? And then you can actually go back and replay it if you want to. Erase everything and then just replay it. You know what I mean?
Thank you.
Mark,
Yes.
as you're on GU right now, right? On Wednesday, Thursday, would you say that would have been the peak formation high, and then it's been accumulating since then?
So this was a market maker cycle last week.
Right.
This particular week here. And then this week, right here, that's playing out. You're saying if it's moving sideways, this would be an accumulation cycle.
Right. Okay. Which would make it level 1 on a
Right.
cycle, right?
Yes.
Okay.
Yes. On the levels part, yes.
Right. Okay. All
Yeah.
right. Just checking.
And then once it breaks this low here, then obviously it would move on to another level or whatnot. So here it is right there. There's your move. That's by the end of Friday.
Okay.
So now I would want to have, for me, I want to have it bounce off one of these EMAs.
To trend down.
Yeah, I would be looking for that.
Okay. Thanks.
Hey Mark, quick question. On the 1 hour when you're checking the levels, it's 3 times the ADR on average, right?
Yes.
What about on the higher time frame, like 8 hours, 12 hours? Is there a certain ADR that goes by?
No, I mean, if you go up to the higher time frames, then you're really not using the ADR in the higher time frames, because I mean, fuck, one level could be like 3,000 pips or something like that, man. If you go to USD CAD, for example,
Yeah.
I mean, this whole thing is one level, and it took freaking a year and a half.
How far does it go up to though, the ADR roll? Like 4 hours, 1 hour?
Oh, the ADR stuff? 1 hour. 1 hour.
1 hour? Okay.
Yes. Yeah, so this is like 1,300, pips from bottom to top on the daily there.
And one last thing, what drives their higher time frames? Is it more like fundamentals, like news?
We got to think the higher time frames are going to be used by institutions, right? So daily, 12-hour, weekly, monthly, those are all used by institutions. They don't trade on the 1 hour time frame, bro.
Right.
They don't care about 15-minute charts. So higher time frame is what they use. They're looking at way bigger picture.
Right. Right. Like right there, it shows a big M.
Yeah, you could see it that way. Yeah, if you go up to let's say like a monthly, right? They went up right to the exact same part. See that?
Right.
Like to the pip. Literally to the pip. What's that number? 46,750. 750.
750. That's a lovely number.
750. Is that a coincidence?
Not at all.
750. Still got a long way to go.
And you're still holding that, huh?
Still holding, baby.
Yeah.
If you're gonna pay somebody's salary by the end of the year.
Jeez. So where's your profit take profit?
It is down here. Down here.
Oh, okay.
The 120,500 area. Because I mean, if it goes below that, you got a long ways to go, brother.
Yeah. That's
like
neat.
literally a long ways to go. Like That's could be like holding like Bitcoin or some shit.
Yep.
So. All right, so let's do. I don't think we ever done. We ever done AUD USD? AUD USD? I don't think we've ever done that one, have we?
It doesn't move for shit, but it's a good pair. No, it doesn't. I
Does
look
not
at
move.
it. I mean, the U.S. session, the London. I mean, yeah, the New York session. It's okay, but just not my style. You know, not for me.
Yeah. I think it's only got like freaking. I think it's 60 pip range. Is it 60 or something like that?
If you can catch a trend, kind of like EJ and
77.
Pound Swiss, yeah. If you can catch a trend on that thing, catch a runner and get in at the top, it'd be a good trade to hold. But
Yeah.
day to day, you know, intraday, not for me.
You gotta catch a runner is the important factor there. I think if you can catch a runner, then yeah, you're right. You can run that up for some time because it does like to. I only bring it up because I know somebody was telling me about this thing has likes to do a lot of trends. And so once you get it, you know, once it gets on a trend, it's a pretty good pair to hold for longer trends. So I want to see how true that is. So I mean, let's say if it's 77 pips or so, it's what is that times straight what, like 230 or so. So I mean, shit, this looks like a peak right here right now actually. So what is that? Looks like a freaking reset there. Let me go up to 1 hour time frame. Here we go. We can get a better picture. So if I'm correct, what I say, what was 77 times 3 is what, 2 something, 230, 231. This was a year ago, so I don't know how accurate that would be. I'm going to say that this right here is almost 3 times 80 yard. That would make this a reset. Or I'm sorry, this would make this a reset. That's the high there. Or not a reset. Yeah, reset. This would be another high. So then automatically my bias would be to sell. Anybody else agree with me on that? Anybody got a sell bias on this? Or is it just me? I mean, that was a trade right there, actually. Let's see what happens on Tuesday. Yep, nothing on Tuesday. Damn, the whole thing down. So I guess, yeah, man, if you can hold it, look at that. If you can hold it from Monday, you get the pattern set up on Monday, hold it into Tuesday. Coming out in the middle like that. There's probably like maybe a first, second. There's your crossover there. Did anybody else see that, or is it just me?
Oh, I saw it. It's a nice, beautiful pattern. Just if that would have been on another pair, that would have been wonderful to take at the pins. No, like right when it goes to the top, like look on a 1 minute, look on a 1 minute chart for the structure and get in on the pins, because it did the 1, 2, 3. It already stop hunted, and oof.
Oh, look at that. Goes all the way down. It's so funny. It's only 36 pip move. All right. See, if you're looking for another sub, you're looking for another pin off of that. Like a type 2 would be cool. This is 8-6. 745. Man, right there. You see that? 830. This is what I was talking about. Like one of those continuation trades right at 830, pinning to the 50. You have that big candle, 2 little candles, another big candle. I look ahead. Jeez. This reminds me of like Euro USD, man. Good moves, just only 10 pips. Just only 10 pips.
Yeah, you have to trade 3 standards and hope for 20 pips.
That's not very good. Well, came off of what? It is true though, man. If you could hold that trade. Oh, there's a type 3 right there. There's your type 3 setup there. Here's another continuation trade. Type 3 comes back down. Pins to the 50 again. Railroad track, 815. There you go. It just doesn't produce the pips, man. It just don't produce the pips, unfortunately. Is the only problem. 185. What's the pair we haven't done that somebody actually trades?
You looking for another pair?
Yeah, one that we haven't done in a while.
What about Euro AUD? I mean, we've done Euro NZD, but
have you ever done the I don't think we've ever done the US 30. Anybody ever done the US 30 before?
Dow Jones?
Huh?
No, but I want to.
No, but you want to. The only reason I bring it up is because Brandon keeps telling me like that it moves
Oh,
just
definitely.
like very similar to gold and stuff, and it has still the same type of patterns or whatever. So it's the only why I bring it up. I have no idea what this thing looks like, so it's
My last quote unquote mentor was big on US 30, but I could never catch like, why are you catching my trade? But he made a killing on it. So
he made what?
he made most of his profit on US 30. He loves it.
Yeah. Well, he didn't teach you to trade it though, or what?
Well, he did. He uses a lot of. He basically kind of trades similar to how you do using the EMAs and the TDI. But then he also uses a lot of support and resistance. And he just read like, okay, I'm gonna get in, and I'm like, but why? You know, because again, that whole like, what are your rules and for making this trade? But anyhow, he was really good at US 30. He'd be like, I'm gonna take this trade, and I'm like, why am I getting in this trade right now?
Yeah.
So
I mean, you didn't know why you were getting in the trade to begin with.
yeah, so I basically never did because again, you know me, like I'm really wanting to know why I'm getting into it before I make that
Sure.
decision, which is why I joined yours. But again, he's very similar to how you trade. He just has a little bit more different rules. But yeah, he loves US 30 stuff.
Gotcha. I don't know. Let's see. See if this has any of this Monday. All right, so let's just pretend that we had. Let's just say that this works off of the same rules, right? So this would be a trending from here to here would be a trending cycle, obviously. So we're coming off of a trending cycle. I don't even know if the pips would be even like accurate on this though. What's the average? I don't even know what the average range is on this. So that's the problem. So you kind of wouldn't know where the tops or the bottoms are really based off of like just ADR by themselves. So that's one problem there. All right, well, I mean, if this is the top here, then I'm probably going to be a seller. And the way that these two are right here, the best possible trade setup for me would be like a type 3. So type 3 pinning to the 250, that would be my trade setup. At least that would make sense to me for trading this. Probably right there. What do you think? Thoughts? Any thoughts?
Yeah, I don't see where it's pinning to as far as hitting the stops. So, like in my opinion, I don't see where it's taking liquidity from. That looks like to me a breakout move to go somewhere to hit someone's stops or
Yeah.
breakout orders. And I can't from that picture, I just can't clearly see what stops they're hitting.
Yeah.
So for me, I would just, pass on that, at least at that time.
Yeah, see, I'd be asking myself like the thing that they're doing here is that they're building a little tiny little baby range, and if they're staying least for me, if they're staying on the lower half of this and these two keep doing this, then if there's another spike up here that you can get in on the wick, and that would mean your call it, your stop loss is like tiny, the risk at least is not that big, then it'd be worth it. Yeah, see that candle right there. There it is. There it goes. Yep. So, I mean, really, so if you're looking at this as a trade setup, let's just say it would have been, I mean, you're still getting a 2-to-1. I don't know how accurate these numbers are, by the way, so I don't know if the decimal is off or not, but it'd still be a 2-to-1 trade. But then you have, this is 9:15, the beginning of, pretty much the US session. So on a star pattern, it's kind of weird. Honestly, it's kind of weird, like trading or, back testing something that you have no idea about, because you just don't understand how it behaves, So you don't know if this is like normal behavior for it to do something like this. I mean, I would assume, let's say, if this is, let's say, a reversal, where would this go to? I don't know what, let's say this right here, that wouldn't be worth it. It would need to go up to at least the top of the range for it to be worth it. If not, it would not be worth it at all. This is probably too big. I don't know if this is 80 pips is way too big of a stop loss. You'd need a pullback for sure. That wouldn't make any sense for you to take that trade. I wonder. What's this? Tuesday. Yeah, moving sideways, sideways, sideways. See, so this is almost like that trade that he almost got caught up in with, or that he got caught up in with going up, taking it as a buy, doesn't it? That you got stuck on, because it's just moving sideways, 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 pinning to the 50 here. It almost looks pretty identical to that. I'd want to see if
And
this
it's
high
hitting the
is
middle of the
tested.
it's hitting the middle of the range too.
Yeah, well, it's just moving sideways, right? But the 50 is kind of like moving it up. So I'm kind of curious to see if it tests this high.
Watch it drop.
Well, it's still not the U.S. session though. So this is like 8:30. Now we're starting the U.S. session. So
Boom. Damn. US 30 can make or break you. I'm telling you, this thing is
Yeah.
a demon.
Well, I mean, there's a railroad track there at 9:45 with a pullback. So, question is, is it that pullback there is probably going to be your best bet, and then you're probably going to do maybe these highs here, see if it goes up there or not. Yeah, so very carefully, man. Hey, you see how it's ranging up on these highs here? There's your range. If you want to trade it long term, got a little baby range there, So that's going to be probably your big range on the higher time frame, let's say. Dude, that's the same shit fucking gold does right there. Likes to give you like wicks, 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 wicks. Yes, their highs is all the way up here. You see on the TDI, it's just moving straight in the middle. So until it makes a significant move, it's not going to do anything. Like right there. That's a nice. What is that? What? 31,200. Look at that low pocket, and then boom, drops. The low's probably around here. Yeah. It's definitely going to take, it would take some work to put in to see how this moves. Really, the most important thing is try to calculate what the pips are on this. So that way you can try to pick out essentially what, the ADRs are and stuff like that off of it. Because I think that's probably going to give you a much better range of directional bias than anything. But it's pretty rangy, doesn't it? Definitely one that you're going to trade in the U.S. session, not London, for sure. Because you can see U.S. session is when it really moves. You're not trading this in London. It wouldn't make any sense really to trade it in London. Yeah. Guys, have any questions? None? We're pros? All right. If you guys don't have any questions, then I'll let you guys go, and we'll see you guys on Tuesday.
Thank you.
All right. Have a good
Thanks,
one. Be
Mark.
safe.